Hello and welcome to Ascending Abundance YouTube channel, where I cover strategies on how to increase your capital and make more money with the money. It's always great to save some and achieve financial independence through savings and spending less, but I much prefer to spend more and enjoy life to the fullest and actually gain more money through various strategies on real estate, crypto, stock market, and business, and any other means for increasing your capital, because I do believe that saving is going to get you only part of the way, and it's also not the abundance mentality. I would rather say that there is enough money to go around and you could just find it and bring it in. So this is the third episode on VIX, one of the strategies that is consistently making me money, and I want to cover options on VIX. So to repeat what I've shared in previous two episodes, VIX is a measure of volatility of 500 biggest companies in America. It's S&P 500. You take every company, you look at their 30 days options prices, and those options prices are going to tell you what is the implied volatility for that stock. Mix it together, you get 500 different stocks. You get VIX, which is just a formula, but you can trade futures on VIX, and futures are traded on Chicago Mercantile Exchange. You can buy and sell them, you can go short and long. And what I'm saying is VIX typically doesn't go high to 80 or even 60 unless it's a once in a decade crappy event like COVID. Typically it's under 40, and if you see it spiking to about 35 or even 30, you can short it. You can short that future, wait a little bit, and it goes down. But what happens if VIX is low? What if it's around 20-ish, like it could be for years? It may not spike for years and years to come. So how do you make money off of it? Here's the structure of VIX. Right now is real time. We are in April 4th. The spot VIX price is 1956. First futures, or the first month's futures is April, is 20.8. The next following month's futures is May. So I would rather work with May, which is 20.17. 22.17, because it's higher, and therefore you have a chance to make more money if you short it. But how do we make money when VIX is 20? 20 is not enough, it's not 30, it's not 35, it's not safe to short it yet, and in the meanwhile I'd like to make some money. So to repeat, VIX today is roughly 1950, April futures 20.8, May futures 22.2. I'd like to play with May. It's 2 months away, there's plenty of time, it's not going to be as volatile, and yet it's even higher. So what I look at is call options on VIX on May 21st. First strike I'm looking at is 30. I think that's roughly the level that VIX achieves fairly rarely. It's give or take safe to sell it at 30 and then ride it all the way down. But then I want to avoid any kind of huge spike. So I don't want to expose myself to VIX spiking to 60 or 80 or 100. It could technically go unlimited. So I don't want to be exposed to that. What I'm saying, in the meanwhile, if VIX spikes to 30, I'm okay to short it, but if it spikes above 35, I could still short it, but I'm protected. Any swing above 35, I'm gonna be protecting myself. So I'll sell a call on 30 strike, and I'll buy the call on 35 strike. Selling it, because the strike is 30, it's lower, it's more likely to hit it, so selling it, I'm making 65 cents for every option. Buying the one at 35 is cheaper, is just 30 cents, so my exposure is the 5 difference, and I'm making 35 cents doing this. So let's put dollar signs in there for consistency. So this is 35 cents. Now VIX futures, so these are options on futures. One VIX futures contract is VIX times 1,000 bucks. So really I'm risking here 5. This is really the $5,000 at risk that I'm putting with this strategy. One option, oddly enough, is not equal to one futures contract. One option is 1/10 of a futures contract. So if I sell one futures option, it's 100 shares technically. It's a times 100. So you could get this formula, and that makes you just a pitiful 35 bucks. If you're willing to go to 10 options, that's the full one futures contract, and that's give you 350 bucks. So with the exposure of $5,000, I'm going to make 350 bucks That's for May. We're in April 4th, so technically it's less than 2 months, but let's say it's only 2 months. What's the interest that you're getting, or premium what you're getting? Rate of return is $350 on 5,000 bucks of exposure. That gives you about 7% in under 2 months. Let's say it's 2 months, so you can do this 6 times a year, right? So do this 6 times a year, every 2 months. So multiply the 7% by 6 times, that's 42% rate of return in a given year if you follow the strategy. So long as VIX is not spiking over 30, you can just pocketing this 350 bucks, then on your $5,000 exposure, you're making the 42% rate of return, which is, you know, reasonable in a year. Just risking 5,000 bucks, you could be making this times 6 over $2,000. It's not going to make you rich. It's probably not going to even make a blip in the big portfolio, but you can make as many of these as you like. So you can sell it every month. You can sell it. You can sell 2, 3, 4, 10 of these if you'd like. Or what you can do is wait till VIX spikes. Maybe 20 or 22 is too low for you, so you wait till VIX is maybe 27 or something. It's still not 30. It's still low. But then if you wait for 27 VIX, or 28, or whatever the dollar or the value that you like, these premiums are going to fluctuate. The higher the VIX, the bigger is your dollar return. You can expand this gap from 30-35. Maybe you would like to do it 30-40. Sure enough, your exposure goes from 5,000 to 10,000, but now this is going to be smaller. This is maybe 10 cents. So now all of a sudden you're making slightly lower return. Actually, it's a slightly lower return, but it's a bigger dollar value, right? So you're risking 10,000, you're making 550. Oh, you can make over 3,000 bucks in a year. That's for some people is their monthly salary. For some, right? Like people have to go to work every single day for months to make this much money. It's not a huge salary, and I appreciate that. But at the same time, this is just a $10,000 risk. It's not much, and it's consistent and it's predictable. And if VIX were to spike, obviously you're losing the $10,000, but you get a chance. If VIX spikes above 40, now let's say it goes to, I don't know, make it up, 55. It goes to 55, you short it, you wait a couple of months, you short like a 2 months out futures contract, you wait a couple of weeks, and it goes down to 35. Here you go, you just made yourself 20 grand. Right, from 55 to 35 within 2 to 3 weeks of a spike is very reasonable. If you were to look at the VIX chart for the COVID, for example, within a couple of weeks you could clearly go from 55 to 35. Take my word for it, verify. If you disagree, let me know in the comments. Subscribe to my channel, leave thanks, or just kind of share your thoughts on what else could be done with VIX. There are millions of strategies out there on how to play it. Most of them are profitable to an extent. Very few make money consistently the way I do, and therefore I'm welcoming anybody's perspective on VIX options trading. So between the options trading and the VIX shorting itself, when it spikes, I am fairly consistently making good returns for my portfolio, and wishing you all the same. Thank you very much, and to the next